I decided to study law because I thought, law is for clever people. I was a clever girl. That's what I wanted to do. Absolutely loved law. Went a bit to Cambridge, did a bit of English law. That was great. Obviously, I was a good law student. I was a good girl. So obviously, I was going to qualify as a lawyer in Paris in one of the big law firms. Started out there and just realized it was a shit job. It was definitely not for me. It was basically everything I'm not. So I'm a bit of an energetic person. I like to move around. You don't want to be a corporate lawyer because you're going to be chained to your desk. I also like to feel that I have some form of impact in what I'm doing. You don't want to start at the bottom in a corporate law firm. So basically, sitting in Paris, next to the Champs-Élysées, in this big corporate law firm, realizing that was not exactly what I wanted to do, I started to think a bit about, obviously, when you're in this kind of situation, you start to think a bit about what you actually want to do. And I thought back to this great place, this great thing that I'd followed for quite some time, the Norwegian Sovereign Wealth Fund, Oljefondet. And basically, back in 2007, so when I was in my first year of law, I remember reading this magnificent article in Le Figaro, basically saying that, the Norwegian people are one of the biggest investors in the French stock market. And when you're a Norwegian, and you read that, you're a bit like, how can this be true? And then you read a bit further, and you realize there's this amazing fund that is ours. And basically, so sitting there in Paris, I was like, maybe they have a job for me. That would be great. Applied to the graduate program, ended up being the first one who was non-finance or non-engineering taken into the program, which they told me when they called me, which was a bit, so, when you're being told, oh, we're trying you out, kind of, as the first non-finance person. You're a bit like, oh, okay, no pressure there. So I started an MBIM in 2014. Actually, I started in Oslo and tried a bit of corporate governance, which is quite related to law in a way. But then got moved to sector strategies, the investment side in London, and just have stayed ever since. So I moved up. You can see I'm getting bigger and bigger. So hopefully towards the end I'm huge. But basically 2017 went up to analyst, and then in the magnificent COVID year of 2020, when we were sitting at home, I started my portfolio. So that's been a long journey, and a journey that I'm still on. And basically every day I jump around and get to have an impact, get to be energetic, get to go out there and find good investments. So I'm still loving it. I just want to, okay, we already have a penguin, that's good. But I just want to talk a bit about just a normal-ish day. So basically, when you're working with markets, no day is really normal because the world isn't normal, right? The morning I woke up and Russia had invaded Ukraine, that was not a normal day. So we have all these days that are a bit unnormal, but I would say there are periods which are more like others, and that's basically when companies report earnings. So that's basically a company will report financial results 4 times a year, most likely. And those are companies I'm invested in or not invested in, so I follow them quite closely. And these days are quite full on, and I've just finished the full year results period. Coming out of that, I was like, okay, now this is a normal day I'm going to present to you. So this is a normal day that I had in February, more or less. So I woke up. That's great. When a company reports, it tends to be before market opens. So since I'm on London time, if it's a European company, that will be before 8:15 in the morning. So it'd usually be around 6:30, 7. So when companies report, you don't go to the gym, you don't do morning yoga. You kind of just get up, and you're like half under your duvet looking at what's happening. They will usually also do a call. So the CEO, the CFO will talk about their results. So usually you would listen to that, listen to what they say, maybe drag out your laptop at 7 a.m. in the morning under your duvet, try to figure out in your financial model, company model, what it actually means. At one point, when you've done all this, you actually get yourself to work. And when you go to work, obviously the first thing you do is just browse through emails to just check if something special has happened in markets I should be aware of related to my investments. And the moment you realize that's not happening, you go back to your earnings. You also look at your portfolio, because you can't control yourself. You have to see if you're making money or not that day. If it's going up, you're happy. If it's going down, you're not happy. And then you continue. You try to continue because you're in the middle of earnings. So you probably have a CEO meeting, and the CEO is probably coming into your into your office. You've probably already prepped it, so you have a meeting, either obviously on Zoom or in person. Then, done meeting, going back to your desk, and then it's time to do a tiny bit of research in between these meetings. So most likely you will browse you will see if there's, again, anything's happened to your companies. Is there any research reports I want to read? I also have a lot of dashboards with data on my companies. So for example, I cover hotels. I get credit card data on hotels. So do I see any change in how much people are spending on holiday in different parts of the world? Maybe not. Are you guys still subscribing to Netflix or not? Are you still password sharing or not? That's kind of data I would look at. And then obviously there will be parts of stuff going back into different kinds of models, thinking about different stuff. Yeah. And then in the middle of my European day, US markets open. And then everything turns around again. And then at one point, you kind of go low on battery. And that will be the time where I will Teams Venetia and go like, hey, markets are crazy, do you want a coffee? And then we will pedal off and have a bit of a coffee. And then obviously I need to be back at my desk, because the company that reported today most likely is coming in again tomorrow to see me. Because obviously, as big shareholders of every single company out there, we have an awful lot of meetings with CEOs. So I will prep that meeting. That was my coffee. Then I'll prep the meeting. And you know what? That's probably a Swedish company, so they'll come in 8 a.m. tomorrow into my office. And this day has been so full on. So maybe I should just get out of there, go to spinning class with my penguin. Boom. I want to talk a bit about just the investment process I run, and kind of how what we call the investment simulator fits into that. There's not an awful lot of emojis on the screen, so it's a bit harder maybe to comprehend. But what I want to talk about, and Venetia touched a bit upon it, but if you think about the start of any investment process, it usually starts with valuation. And when I say valuation, I mean what's the price of the stock today, and what is expected, what's the expected value of that stock that corresponds to that price. And that's the start of any investment. And then you think, okay, so the value of that stock that is quoted today, is that correct? Is there something there that I can research or think about that makes me think that this company is actually worth a lot more or a lot less? So basically, that's when you start kind of thesis building. And thesis building is basically the core of the research process. It's me saying, Netflix is trading at 450 USD. Do I think it's worth that? Do I actually think this whole password thing is actually going to work out really great for them? And they're going to bust all you guys from sharing, and they're going to earn more money, and they're going to be more valuable? Maybe, right? And how I can kind of go about that is I can talk to the company. I can talk to experts, maybe people who worked at Netflix before, who can talk to me about it. I can actually go out and talk to people who use Netflix. That's actually quite a lot of fun, because Netflix is something everyone uses, and everyone can tell me about how annoying the whole password thing has been lately. But then again, I can also understand that you can't share anymore, so that actually they will earn more money. All these things kind of makes me determine whether it is worth more money and I should buy. Say I decide to buy Netflix on the back of this whole password sharing thing. Then I go into what I would consider execution phase, and that's kind of where what we call the investment simulator comes in. So execution phase for me is when I put Steffi buys 40 million of Netflix into my trading system. When I put that into the trading system, the investment simulator will have accumulated a lot of data of how I've traded previously. So it will sometimes feed stuff back to me saying, you know, you've been really poor at trading Netflix before, or, you know, Netflix consensus number isn't actually going up, or it will tell me lots of different stuff that will pop up on the screen. You can this could be your reaction to what I've been trying to explain to you. If it is, I just want to show you what the investment simulator on my trading system looks like. So basically, we have what we call the simulation. This is not my portfolio, by the way. I don't trade Nintendo and Ubisoft. But this would be the companies in my portfolio. I would have different weights on them. And then, for example, I would put in a trade. I would say, oh, let's buy 3% of my portfolio in PayPal. That's a great company. And then before I actually click buy or sell, I will get these signals up there. So the market signals, there will be data that the investment simulator drags in from markets. So it will be, is there a high or low short interest? Is there a lot of investors who don't believe this company have been shorting it? That's a good thing for me to know. The best part is still the PM signals. Again, Venetia might have touched upon the bias as part of the whole puzzle. This is where it tells me that I have biases. And obviously, it's very hard to tell yourself your biases. So if the data or a machine does it for you, that is quite good. So again, it can tell me, maybe I'm not particularly good at what we call off-benchmark positions. So if I'm not, maybe I should think about that. Maybe I'm particularly good at big orders, small orders. Maybe I'm particularly good at buying companies when I've had a meeting with them, which is data we can get, because obviously they know when I've had a meeting, and they know if I sold or bought after that meeting. Again, if this makes no sense to you, which I could totally understand, because this looks very confusing, and I have tons of financial words up there, you're very welcome to come and find me, and we can have a chat about it. Thank you.